Right back to earnings, and joining in on the show is Sameer Kamath, the CFO of Motilal Oswal. Thanks so much for joining in. I want to understand from you on a group level, can you tell us which business contributed the maximum to your growth and what's the sustainable ROE?
Sure. See, at an overall level, we have grown by about 54%, and it was healthily contributed by all the business lines. Predominantly, the biggest growth came from the housing finance business, where we have been scaling up that business over the last 3 years. The year-on-year growth in that business has been about 145%. Also, the asset management business has seen some good traction. I think the year-on-year growth on that is at about 56%, driven by strong asset growth. We have an AUM about 15,000 crores as of now, which is also up 50% year-on-year. The capital markets business also saw a good traction on a year-on-year basis, though sequentially it was a bit impacted because of weakening sentiments of post-demonetization. But that business has also seen a top-line growth of about 26%. So that together has helped us contribute to a healthy growth of about 54% on a year-on-year basis.
And what's the outlook on the home finance business? It has once again seen exceptional growth, So what's the outlook over there on the asset quality, on the AUM growth, as well as the disbursements?
Yeah. So we are in the business of affordable housing, where our average ticket size is about 10 lakh rupees. So this quarter we have closed with an AUM book of about 3,300 crores across 36,000 families. We are present predominantly in 4 states now, and the idea was that a better part of this year went into deepening into those states. So the growth parameters is in line with our business plan. Post demonetization, we have taken a conscious call to slow down disbursements till the skies are cleared in terms of how we are in terms of collections, in terms of NPAs and other things. But we are glad to report that all those parameters came up to mark, and we have reported healthy numbers on that front as well. In terms of a growth outlook, we are expanding our presence. We expect that the growth plans for this entity continues to remain strong, and we are invested into this business for the long term.
Okay, and is there any further capital infusion planned in Aspire, and any plans to list this business separately?
That is something that the board will decide in due course, but we have already committed earlier as well that whatever infusion is required to be done for Aspire will be done from internal resources, and also at some point in time we may look at external funding, but that's for the board to decide. The capital infusion for this year is through. We have infused about 300 crores of capital in this financial year in the first 2 quarters. That's adequate for this year's growth plan. The next year's growth plan will also require infusion, which the group will infuse from its strong balance sheet that it has at a parent level.
That's, of course, about Aspire. And what's the outlook for the PE and wealth management business? What future profit bookings can be expected? And do you believe that the share of this business would be increasing towards your consolidated revenues?
Definitely. I think PE is a business where you raise funds, and towards the end of the fund you see a big revenue accrual through carry coming in. We had that in the first 2 quarters of this financial year, but that's not all. I mean, we have some carry booking left, but that's probably between starting of the next financial year. So this year we have done most of the carry booking. I think at the group level this has contributed to about 63 crores of PAT for the 9 months as of now. The first fund is now almost to be exited by the start of the next financial year. The other funds are largely deployed. So I think that's a business which has seen good traction, seen the full life cycle, and we're quite optimistic about that business. The wealth business is also something which has started off within our group about 4-5 years back, and has built a meaningful book of about 9,000 crores. That also has seen a AUM accretion about 50% year-on-year growth. So that's a business which synergizes well with most of our other capital markets business, and we see a good growth potential for that business as well going forward.
Sounds good. Thank you so much for joining in, Sameer, and giving us a snapshot of how things have shaped up. So housing finance clearly has driven growth, and the growth plans for that business continues to remain on track.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.